Hey guys, and welcome back to the Accumulation Zone. In the last live streams, I've been talking a little bit more about Bitcoin because that's actually how I landed in the trading industry by holding and buying Bitcoin and other altcoins over the last couple of years. And yeah, I asked if you guys are interested in like a little bit of Bitcoin analysis. So that's what we're going to do today. We're going to look at the Bitcoin US dollar monthly chart, and especially we're going to talk about the halvings. We're going to look at it from a ICT kind of perspective. So basically using market structure, buy and sell side, fair value gaps, breaker blocks. So let's get started by looking at the current cycle from the bear market low of 2018 all the way up to the bull market high, coming in at around 70,000 US dollars. Right here we saw right after the Bitcoin halving, here was COVID, March 2020, Bitcoin halving during 2020 came in on May. We got the beginning of the bull market already. So starting from the bear market low, we consolidated. Actually, if we zoom in here, we kept holding on these two bullish fair value gaps here, or inefficiencies, if you haven't heard about fair value gaps yet. Bullish fair value, let me fix that in the object tree and make sure that's visible on the monthly. So we kept holding here, and from there on, we had the crypto bull run and also the stock market bull run and all that stuff. We continued forming a high right at 65k. We pulled back, forming a higher low. So we could mark this as well, higher low. And we once more took buy side liquidity. We saw that we never closed here on a monthly basis above the 65k level. We only swept this high. Then during the month of November, we swept the high for October, and afterwards we rejected. And from here on, we formed a higher high. So let's just follow market structure here to see if we can make any sense out of it. We formed a higher low, a higher high, then we formed a lower low. This little swing point in here, I would deem it to be internal. Really, if we look at the bigger picture, this is our lower low, higher low, higher high, higher low, higher high, lower low, lower high, lower low. So let me map this out here as well. This is our lower high. Just looking at market structure without any bias or anything involved. This being our lower high, let me zoom in here, really helps us to draw our market structure tool. Therefore, we use the path tool right here. So we're coming from the top, we're forming a lower low, a lower high on the monthly time frame. So on a weekly, you actually see the movement in here, but I want to look at the bigger picture. Lower low, higher high. On the weekly, we could frame this as a higher low, but here for the purpose of market structure, we can't really do that. Higher high, higher low, and right now we're at the highest point for the year of 2023, sitting at 43,800. Very likely you just started to hear about Bitcoin again, or Bitcoin is pumping. It already moved. How much did it move this year? January 2023, 117%. Am I missing out? Should I FOMO in now? And yeah, that's pretty much what this video is for. I can't really tell you any advice or like financial advice. This is just me doing my analysis. If you are a long-term watcher of the Accumulation Zone YouTube channel, last year around, I don't know, I think October, I made a video about how I'm managing my crypto portfolio. And inside that video, I talked about that I'm going to buy every dip to the downside. I scaled in here, 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 and even down here. Dollar cost averaging into the downtrend. My average entry comes in at around, let's say, 20,000 because I added more and more and more size on our way to the downside. Also buying some altcoins. And now the portfolio is already nicely in profit. But we want to see what we can do if we haven't done that and if we haven't seen that video or acted on it. And following market structure, support and resistance, Ict-Concepts, we would look at our most recent higher low from our last displacement or movement to the upside, higher low, higher high, lower low. So this would become our bearish breaker block, which is overlapping perfectly with our bearish fair value gap right here. And right now we can see that we closed just below the 50% of our bearish fair value gap and also of our breaker block. If I would turn on the middle line right here, we see that comes in almost at the perfect level. We also had a CME futures gap right here on Bitcoin, right at 35K. So we will see how price continues here. We could really see a rejection into these relative equal lows to take out some sell side, because that's always what's happening. They fool the masses to go long at 35K, and then price drops down all the way down to 23K to take out the sell side liquidity. And yeah, just because the masses or the retail traders, they buy up here and they're fearful because Bitcoin dropped 33% and their portfolio is down 33% and they're selling it again. And yeah, retail investors selling Bitcoin again leads to institutional players being able to buy them back at a cheaper price because they have the deep pockets to do so. Alright, so just looking at market structure and the bear market or the downtrend right here measured from the higher high to the lowest low, we're right around the, let's say, 33% retracement level. The 50% retracement level comes in at 42K. And yeah, we have more buy side above, being this monthly high from March 2022 paired with a bearish fair value gap. We will see how we get there, but I think the most important part we have to talk about is the Bitcoin halving. The Bitcoin halving will happen during May 2024, right here. And yeah, I think to further explain more about the Bitcoin halving, it's time to take a look at our previous historical Bitcoin halving events. So now we are on a logarithmic scale to actually take a close look what happened during the previous halving events. That's why the Fibonacci retracement tool or this PD array is slightly off, because like I said, we're using a logarithmic chart, because otherwise we won't really see what happened on the monthly time frame during 2011, because relatively speaking the movement is significantly smaller. We had our peak at 32 US dollars and our low at $2. And yeah, nowadays we're talking about differences of between $10,000s, from 70,000 all the way down to $15,000. That's why we have to use a logarithmic scale here. And really looking at the logarithmic scale helps us to see that most of the time when we are in a bear market, we do not always get that 100% retracement. 2011 bear market low right here, 2015 bear market low, 2018 bear market low, and potentially the 2022 bear market low. There's no need for us to go all the way back below this level. And careful, this is just my opinion. A Bitcoin bear would very likely have a different opinion. That's why I ended up buying more and more and more the further we retrace to the downside. We kept holding on these bullish value gaps right here to the left. And also, if we take a look at classical support and resistance theory, a old high should act as resistance. We close above it, we use it as support. And now, old resistance being flipped into support. What do I mean by that? We push up, we hold resistance here, we push through it, and now we're retesting exactly this level. So this is looking rather good for the potential bear market low. And if you guys really enjoy watching that Bitcoin content or the crypto content, I will also take a look at, let's say, for example, the total free crypto market cap charts and all that to, have a closer look at what the crypto market is really up to. Because so far, I mainly have been focusing on the index futures charts, like here, for example, the S&P 500. But let's get back to Bitcoin and the halvings. Right here, it's the 1st of November. That's where the 2011 bear market low came in. And to the halving, that was around 12 bars, so 12 months, 1 year from the bear market low to the next Bitcoin halving. And what did we see afterwards? A nice movement to the upside of roughly 2,500% before we pulled back and continued once more to the upside. Let's look at 2015. 2015 basically formed equal lows here. If we measure from the first low, that's 18 months. And if we measure from the second low, that's 11 bars, so 11 months. Very similar to what we already saw here during the 2011 bear market low and the Bitcoin halving in November 2012. Alright, so now let's look at 2018, because what happened after this Bitcoin halving, once again, we had a pretty impressive rally of, 4,000%. So now we're looking at the 2018 bear market low. Here we had the black swan event being COVID. We saw that across, all assets. If we measure from the low, 2018 bear market low, we see we have now 17 bars towards the Bitcoin halving. And it's healthy to expect that, we can see the low towards the halving, that it's increasing, because, we can't always expect a 4,000% rally from where we're at right now. There's a cycle theory where we can see something like this, that slowly, let me find the right tool, curve, that slowly but surely we will happen to top out, something like this. That's what it's looking like. So if we form a curve and we connect all the highs, it's going to decrease. So back in the days you really had these volatile runs, but if we compare this volatile run after the halving to the 2022 bull market, this is a 4,500% increase from the halving right here. This is a, where's the measuring tool? Here. This is a 10,000% increase, and during 2022 this was a 624% decrease. So it's pretty obvious that, the movement to the upside becomes, relatively speaking, less. In dollar amounts, more, but percentage-wise less. I hope that makes sense. So, based on that, we won't, because based on historical data, we won't see a 5 or 10,000% increase like we saw back in the days during 2013 and 2016, 17. But we can still use that historical data, because if we would assume that the 2022 bear market low has been put in place, and we measure to our halving, we end up within our range 12, 11, 17, 18 bars towards the Bitcoin halving. And what do we do after the halving? Yes, also in 2020 we started the rally, and like we already looked at, increased 600%. So if we would do that from somewhere inside this area, we would, in my opinion, hit the 100k target, but I'm pretty sure that we're at least going to form a new all-time high. The future indexes, they also look very similar. Let me hide the indicator here quickly. We had one of the most bullish weeks on the S&P 500 futures index this year. I mean, really impressive. We moved a total of 250 points, also on the Nasdaq. And we can see that same tendency. We will see. We can't know for certain just yet if the bear market is over. We also have that pre-election cycle or pre-election year cycle. Like I said, I can't go into too many things in this little video, but I hope you get the idea. And if you really like the content and me talking about the crypto market and a little macro analysis, then I will do more of this stuff. So just based on all these ICT concepts, we can't really say that, okay, this is a breakout block and we reject from here, because then we would basically have to do the same thing here. I know this is looking a little bit different because we formed a higher high. We had a double top, bull market top. The last time we've seen that was on the monthly chart, not at all. So every cycle is a little bit different. If we follow ICT market structure, what would we expect from here? Where do we have the drawing tool? Of course, the movement to the downside. This is our pullback into our breakout block paired with the bearish fair value gap for the continuation lower. but simply based on what we have done in the past with each and every Bitcoin halving measured from the bear market low. You can see that towards or just before the Bitcoin halving, we almost always touch the 50% of our bear market retracement. Bear market retracement prior to the halving, we've already touched the 50%. So where are we at right now? Bear market low, potentially. 50% comes in at 42K. If we touch this, we could see a retracement, a little dipper, holding here until the Bitcoin halving comes in, and then maybe a rally during 2024. But right now, I don't think it's the best time to buy. I always like to buy on bearish weekly candles or even bearish monthly candles. You can't expect every month to simply go up. We also didn't see that last time around during 2019. We had our push up to the 50% level during June in the year before the halving. So right now we're also in that year before the halving, but we didn't see such a strong push already to the 50%, but yeah, something very similar. I mean, we already moved 120% to the upside after this FTX collapse and all the other things that happened during the bear market. But it's starting to look very similar. We have our retracement, our push back up. But like said, buying right now, maybe not the best idea because we still have, let's see how many months until the halving. 6 months, so roughly half a year left, 180 days, where we could potentially slowly dollar cost average into a position to still get in around maybe 28, 30K, maybe even buy the dipper below 24K, and from there on watch price go to the upside and potentially sit in profits by mid next year or the end of next year. So we will really see what's going to happen to Bitcoin. I think the best approach, like always, is to buy dips and buy pullbacks. You could argue this to do the same thing on the stock market. We retrace, we continue to the upside. When do you buy? You do not buy here, you wait for pullbacks, you buy some here, buy some more here. Okay, we continue lower. Okay, I'm going to buy some more there. And eventually, your average price moves from here down to, let's say, here. If you buy here again, then you bought here at the low again on Friday, for example. And yeah, eventually your average price lands in somewhere around this area. Your dollar cost average into your S&P 500 positions or simply your stock market positions. And eventually you get rewarded. And by the time we reach this high, you're already up nicely in profit. The same way I have done it on Bitcoin US dollar. And yeah, once again, before we end this video, if we look at market structure, we formed our lower low right here. We had our break-in structure. And if we take a close look at this monthly bullish value gap to bring it back to the ICT analysis, we saw that we kept on holding here perfectly. We didn't take out the sell side. Many people were surprised. Bears scored 20K at this level, and yet we got another push to the upside. But overall, yeah, we kept holding on this bullish value gap. Now it's gone. Let me show it in my object tree. The default settings are a little bit off. We kept holding in this bullish value gap, and this is bullish order flow, as bullish as it comes. We respect bullish inefficiencies. We ignore bearish inefficiencies, like for example this one right here. We initially we hold resistance, but then we close above. What do we do? If we close above a bearish fair value gap, it becomes a inversion fair value gap, and out of old resistance resistance is now support basically. And where did we bounce? If we take a very close look and get rid of our market structure tool here, bullish fair value gap paired with the inversion fair value gap. Very nice here. Bearish fair value gap becomes support. We consolidate here for a little. We failed to sweep this buy sell side here one last time. I actually had limit orders just below this low because I was already looking at it. And yeah, we expanded to the upside. So now we're inside this bearish value gap paired with the breaker block to bring it back to Ict-Concepts. We will see what's happening here. We could really see a retracement or just some continuation lower. before the next Bitcoin halving. We will see. And yeah, I will see if you guys liked the video and you would like me to talk more about Bitcoin and the entire crypto market. If so, I'm gonna start like, I don't know, a few videos every week or something like that. But yeah, first of all, I want to see how well this video is received. And if you did like it, make sure to give this video a thumbs up and also subscribe to my YouTube channel. Let me know in the comments what you want to see. Do you want to see Wyckoff analysis right here at the bear market low? I've already have that on my charts. If you want to see that, let me know in the comments below. Alright guys, take care and enjoy your weekend. I will be back streaming live on the S&P 500 futures contract on Monday.